So good afternoon, everyone. And it is, let me tell you, fantastic to be in Cape Town. The problem is, I don't want to leave, and I've got to go tomorrow. So I actually didn't, I nearly didn't make it. I left London on Saturday evening, crammed up, as you are, and fell asleep pretty quickly. Because it was one of the kind of late flights going out. And within about 45 minutes, there was a call for a doctor on board. And, you know, didn't really pay too much attention. And they called for a doctor 3 times. And what had happened was some passenger had hit their head on the flight on some sharp instrument. And actually had gone into a coma. So we, the first time ever, I had an emergency on the flight, but the fact is I didn't have that data. So we just, you know, it was a pretty scary experience when you look at the flight attendants and the pilot speaking and saying we're going to land in Lagos and you don't have the information. But anyway, that wasn't too fateful. We made it, and I'm here, so delighted to be here. I have the joy of giving you a 15-minute journey into the world of fintech investment globally. So it's a bit of a tall order, but I'm going to do my best. A little bit about who we are. So we're an organization based out of London. Ironically, none of our business is from the UK. We operate internationally. We are a mother brand. Fintech Circle has 2 arms. I represent the Innovate arm, the purple logo there. And what we do is essentially we're an advisory service and a source agent for large organizations wanting to consume what we term the fintech revolution. And that consumption can take the form of investments, acquisitions, or partnerships. And we do, you know, a whole bunch of strategic work around open innovation. So a fascinating journey, I have to say. We also work with the individual investor. And we have the largest angel network in Europe dedicated to fintech. So the investor landscape is varied and highly diverse, but there is a tremendous amount of interest in this market, and there should be no surprise. So I love this statement, and I think, Martijn, wherever you are, oh, there you are, okay. It talks, you know, I think there's a lot of resonance with what Gandhi says here. And I have to say, no time ever have I ever seen the rate of change in one market alone. I entered this space 2 years ago in a corporate role, actually, running a big payment strategy for a software company. And at that time, the term fintech wasn't even coined. A short 2 years later, and the world has ignited in terms of interest. So the ecosystem is growing massively, and for good reason. Financial services is going through the most fundamental shift it has seen, not in decades, but in centuries. This is not an incremental change, but a tectonic shift. And what is behind this change is technology. And it is not just about making things faster, cheaper, and increasing speed to market and efficiency. It is literally about changing the business models of the future. A recent study undertaken by Accenture studied a cross-section of banking executives in London across the tier 1 banks, and 77% of the respondents admitted that they didn't understand what this wave meant for their businesses. They went on to describe the fact that structurally they wouldn't be able to take advantage if they didn't move fast enough. And all of them acknowledged that while they knew this change was coming, it wasn't about the what, it was how they executed fast enough. So momentum is everything. So let's just take a quick snapshot at what is driving this disruption. Well, funnily enough, innovation doesn't come out of nowhere and is sustainable for very long. innovation always follows the money. And this market is seeing untold interest from an investment landscape and investors globally of all shapes and sizes. At the end of 2014, we will enjoy, as a globe, about $20 billion in investment in fintech alone. This equates to a threefold increase since 2011. So about 46 to 48% year-on-year growth. It is gigantic. We will probably close on approximately 900 deals globally this year. The US market is by far the giant in the game, as you'd expect, both in volume of deals and value. They probably kind of cut into this pie, sitting at about 13 billion. But the market is very, I would say, any Americans in the room? No? Okay. Okay. I would say it's somewhat predictable. Europe is enjoying the most growth by far, sitting currently now at about just over 200% growth year on year since 2011. But what's interesting about Europe is it is a much more interesting market. Fintech is probably, sorry, we may have to change the banners next year, is becoming slightly meaningless because already you're starting to see the deep verticalization in the market across the financial services value chain, right? So you're now getting segments arising such as insurtech, regtech, all right, using technology to aid compliance and accelerate that. So regulation is not seen as this bad thing, but something that actually can be used for good, and it helps structurally change the inner workings of large institutions. Open tech is another one. Very interesting. This is, certainly, again, the UK is a very strong push for banks out of policy to open up their APIs, and there's a flood of players coming into the market that are taking advantage of linking the new world order to legacy systems. So a huge opportunity. Asia, very interesting market, very fledgling, but the difference with Asia is that the governments in Asia are taking a big role. So Hong Kong and Singapore have enjoyed big chunks of government venture funding coming in, not only to fuel the local entrepreneurs, but to attract businesses globally, worldwide. So where is the money going? This is a little bit, as I said, this is a little bit American-centric. But the main plays, as you'd expect, are in predominantly the B2C market, right? So payments, cryptocurrency, and I'll add blockchain to that because that's rapidly gaining momentum. Personal finance, management or wealth management from a retail perspective, and lending. Huge amounts going on in this space. But this is, very symptomatic of any technology wave. The whole B2C space disruption happens first, and then the B2B space takes on. And actually, if you take some of the largest venture funds globally, such as Accel and such as Index Ventures, they are now betting purely on the transformation game in the B2B stack, right? And there is a big stack to change. So this game ain't going away anytime soon. I don't know if anyone's seen this, this infographic. I got quite excited when I saw this, but it's been with me now for a year, and I use it. I used it initially to describe the disruption, right? Literally the unbundling of a bank, with all these players entering the market and picking away at the various segments. This tells a really scary story. Well, it did, at least 12 months ago. Actually, now what is happening is that this is a very different picture. The institutions that get it are using this kind of landscape to look at plotting their own acquisition strategy. And I'm going to focus quite heavily on corporate venture in this discussion because I think this is the great white hope. What you're also seeing here, and I think there was a question, a very good question actually, about consumption. You know, technology for technology's sake is one thing, but actually consuming this technology. This picture is a rabbit's warren, really. I mean, you know, no retail banking customer I know of myself would want to have a flood of you know, different zany products to deal with. It's just too much. So what we're seeing now is we're seeing quite a lot of consolidation in the market, but a lot of these players coming together. So, for example, a firm in the middle of the screen here and PayPal have recently linked up to look. PayPal's moving into the lending market, and a firm is a very neat, as they'd say, alternative adjudication technology. So again, it's two sides of a coin. And the picture now is certainly far more positive for those organizations that have got it and are moving with the tide. So corporate venture. I picked this data out of a recent study from a research arm in New York. I don't know if anyone subscribes to CB Insights, but if you're interested in this business and you're interested in the investment landscape, I would definitely subscribe. They produce amazing data. They also have a very expensive dashboard, which over a drink I'll tell you how much it costs, but certainly just out of interest, they produce fantastic reports. And this is a study of the global corporate venture data coming in just for Q3 of this year, which currently sits at nearly $40 billion. It's astounding, really. So in a short 3 months, the world of the enterprise investor, you know, and this is not just fintech, you know, I have to make that clear. But in 2014, 40 corporate venture arms invested in a combination of VC and accelerators, equating to $29 billion. In the same year, 10 corporate venture functions had fund sizes exceeding $250 million. Corporate venture is very much in vogue. Closer alignment to the VCs means that smart money can follow even smarter money, or so you would think. But more large corporates are beginning to understand the value not only of consuming technology, but being investors themselves. Fintech is the perfect storm for corporate venture to be the new power broker in the market. And I'm going to come back to that in terms of the context of Africa. So dozens of banks and financial services companies are setting up their own funds. And they are committing across the spectrum of maturity in terms of investment, from seed right the way through to late stage. And so what this is starting to do is starting to change the game in terms of the David and Goliath syndrome. It's hugely encouraging and certainly a pattern that is set to continue. So if we take a quick look at some of who those big names are, unsurprisingly, some very familiar names. Again, apologies, very American, but I will touch on some of the other European big funds. So I guess out of the American tier ones, the most active fintech investor is Citi Ventures, a highly mature organization. They have a very robust innovation program, labs. They have about probably 6 labs in the US, and they have a number of collaborative labs, and they run something called the Citi Mobile Challenge all over the world. In fact, they have one in Nairobi. They've made 30 investments. Goldman Sachs, amazing, actually. They, as an investment bank, essentially, by DNA, they have been right to the front of the game in terms of fintech investments. Just as an example, they invested in a company called Kensho in capital markets about a year ago. and it was a joint investment with themselves and Google. Just on the tech investors are giving the banks a run for their money in this space. The most active tech investors in fintech are Google, unsurprisingly, eBay, e-commerce, payments predominantly, and Intel. In fact, Intel are doing a huge amount in the area of voice and IoT, specifically in the area of credit risk and insurance. In London, HSBC, Barclays, Santander all have huge funds, right? All different size and shapes, but essentially they're all staking their claim. And you know, it's going to be very interesting to see how they all manage to kind of draw down between $100 million and $250 million, because the deal flow clearly has to satisfy those big appetites. But it is a very, very interesting mix. So what does this mean in terms of the South African and African context? Well, I've had to apply a little bit of license here, simply because the data is pretty hard to find. Let's start off with the fact that global attention is on Africa. I'd like to come back to your earlier point. The world gets Africa for good reason. Financial inclusion and the wave of mobile financial services is on many an investor lips. World Remit, a very good example, founded by a Somalian, a chap by the name of Ismail Ahmed, who's based in London. They just completed a fundraise of $150 million. And they are now valued as a unicorn, an organization, an entity, a tech company, sitting at $1 billion. There are 36 unicorns, by the way, just so that you know, in the world today in fintech. And they're one of them. A huge success story. And they are, unsurprisingly, a remittance proposition, unsurprisingly focusing on Africa in a big, big way. About 4 months ago, we completed a study on some of the rising stars, the innovators, north of the border. And we were hugely surprised by the number of very innovative plays coming out of East, West, and North Africa. So innovation is everywhere. And as I said, it always follows the money. Now, tech and the VC asset class are perennially linked. I think the biggest challenge, personally, that I have is around dinner tables and conversations I have with folks in territory is, the tendency to talk about private equity as a base point is quite common. But private equity really, truly, as a fund structure and as an asset class, truly only works for large, established businesses, right? It doesn't quite get startup. It is there for transformation in tech companies. It is there for companies that are established and are really good as part of an M&A strategy. And so the VC investor landscape in South Africa is something that we've all got to foster. I was very encouraged on the weekend. I read the latest South African VC report, and we're up there are about 10 more VCs now in South Africa than 2 years ago, which is great. But the worrying thing is actually that the deal size has decreased. And if you look at that graph, that is concerning, all right, because there is an equal number of startups to growth companies, and that, that metric doesn't sit well, certainly with me. Digital businesses are about scale. And one of the things that I found talking to South African entrepreneurs, and I'm sure present company excluded, is that South African entrepreneurs, they think locally. They think locally, they don't think globally, all right? And this market is about acting locally, but thinking globally. And this is something that the VC community in South Africa is really, truly struggling with. The TIA, which was set up in South Africa by government to really provide a boost into the asset class, has really, really struggled. And this is why I come back to the play in terms of corporate venture. If you look at any sustainable innovation ecosystem, there are 4 tenets for success. Of course, you need the innovation, the entrepreneurs, and you need that to thrive. So you need to have a flood of talent and capability and expertise that can move cross-border, that is boundaryless, essential. You need the consumer, and the consumer has to be, at some point, big business. They have the big pockets, all right? And it is this consumer that is actually turning the tide in fintech, because the large institutions, the ones that do get it, are thinking investor first and consumer second. And then, and I said this to Graham, wherever he is, that for the next event, we have to have the policymakers in the room. This is the biggest issue, right? So the kind of key obstacles or barriers are tax incentives, exchange control, all right? I saw this 3 years ago when I myself was trying to set up a tech fund in South Africa. These barriers still remain. And until we can actually crack that, I think, you know, big business in the room, large institutions, your role becomes even more pertinent. So, whilst tech is a different game, where risk is always part of the game, the returns are there. One message I'd like to leave you with is the option of doing nothing is not an option. Thank you.